Hey everyone, so in this video I'm going to be talking about the non-investment uh, strategies available to you. The first one I'm a little biased towards because it is my personal favorite vehicle of choice for building wealth is real estate. I really have the majority of my wealth in real estate, and it was through reading the Rich Dad Poor Dad book and then starting to learn more about real estate in general that kind of really got me down this path. And realizing that when you're using creative wealth building strategies, there's a lot more options for people who take the time to learn about their investments. And real estate is a great example of that. You have to learn real estate. You have to learn how to find deals, how to manage your properties, and it's a little more hands-on. But you know what? In my opinion, it's the biggest bang for your buck. All right, and for me, it's here are tons of reasons why. And number one, you can purchase real estate at a discount. Right, that's something that is not the same in the stock market, right? And I shot a video about the 3 advantages of real estate that goes into that. But just to recap, when you purchase stocks in the stock market at a discount, it's when the stock has dropped in value, right? And then you're assuming that when things settle down, the stock will go back up in price, right? So when the whole stock market goes down, buy stocks at a discount, and then sell it after it goes up. As history has proven time and time again, many investors do not follow this model and typically bail out on the way down and then start buying on the way up, and their margins are all backwards. And yeah, so timing the market, that could be a skill in and of itself. But when it comes to real estate, you don't have to worry about that because you can purchase real estate at a discount regardless of what the market's doing. So if it's an up market, you could purchase real estate at a discount. If it's a down market, you could purchase real estate at a discount. And you can already build margins into the deal, right? Each deal is separate and specific, right? You have to do your due diligence as an investor and make sure that you look at all aspects of the deal and how you can lose money and how you can cash flow the property well, because a positively cash flowing property, right? It doesn't matter almost what the principal asset is worth because you'll still be able to have that property cash flow, right? And when it comes to holding a property long term, let's say you purchase a piece of real estate right before the housing market, the bubble bursts, right? So you purchase the piece of real estate, the bubble goes down, and you're like, oh no, all right, I just lost a ton of value in my home. Well, that's one way to look at it. But also you could look at it like, wow, now you get a bunch of tax savings until the value comes back up. Because if you had purchased back in 2009, which is what one of the first pieces of real estate I purchased, it's been a decade and it's gone back up to what it was. So if you're holding real estate long term, eventually the assumption is, and again, past performance does not indicate future results, but the indication would lead you to the conclusion that at some point in time, the real estate value would recover. Now, if you have your property cash flowing properly, that blip in value of the principal asset when the housing value goes down, that little blip doesn't matter, because with positively cash flowing real estate, you're able to cover all your expenses, keep your emergency fund full, which I recommend. Me personally, I do this. You keep at least 3 months of your expenses in an emergency fund per property, right? Because anything can happen to that piece of property and you don't want to have to be dipping into your own personal fund. So I just kind of, little expert tip, have a separate emergency fund for each piece of real estate. So back into the pro tips of real estate, right? When you are investing in real estate, it's all about the numbers. It comes down to a numbers game. And that's a key thing to remember, because a lot of people get lost in, I really like this property, I really like the design of this property, I really like these features, and et cetera, et cetera. What you have to do, especially like if you do any work on your property to improve the property, you have to look at it in terms of ROI, return on investment. The money that you're putting into this is for the purpose of getting a certain return back. It's not for you to have your creative design of making a beautiful home and blah, 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 blah. No, it has to be in terms of practical, right? What is a beautiful thing you can add to the home that will increase the value so that you can get a higher ROI, so that you can rent the property for more, so that you can sell the property for more later. All of these things, all of these numbers, you have to figure out to determine whether or not the deal is worth proceeding, right? And you have to make sure there's enough margin built in for mistakes, for emergencies, for unexpected scenarios, right? So I'm not going to go into tons of detail in this video about the numbers or how to calculate them or what the numbers mean. But if I get enough positive feedback here on this video and about the content I'm putting out, I will do another mini series on real estate in general, sort of like a general introduction to rental real estate when it comes to like single family homes, and how you can structure it in a way that you are protected. All of the rental real estate that you purchase, for example, would need to be in an LLC and not owned by you personally, and that's a type of asset protection strategy that exists. Again, not going to go into a ton of detail here, but if you guys are really interested in real estate, I can talk a lot more about real estate strategies in a separate mini series. All right. Okay. So other advantages of real estate as an investment vehicle. Okay. There's tons of tax strategies that come with it. When you are collecting the rental income, you can depreciate the property and sort of cancel out that cash flow. So it's sort of like tax-free cash flow that you can use. And imagine this, all right? You can purchase a piece of real estate at a discount. You yourself can own the principal asset worth, we'll use 100 grand for this example, right? Let's say a piece of property worth $100,000, but you're able to get it at a discount because it needs work or whatever, and you can get it at $70,000. You can put $10,000 into it, 80 grand, you already have a 20% built-in margin, right? Now, you can get into that deal with 20% down, and you can finance the rest. You can use other people's money to make the deal happen, right? And then you use your rental income to pay the mortgage, right? Which then at the end of it, you will own a $100,000 asset for having only put in $20,000 into the deal, right? So that's kind of the big concept of how real estate can create wealth long-term, like long-term generational wealth, right? And beyond that, when you go to sell your piece of real estate, unlike the stock market, you can use that money to invest in another piece of real estate valued at an equal or greater amount, or multiple pieces of real estate valued at the same or equal or greater value, and do a 1031 exchange so that you defer the capital gains to the next property. And if this is long-term generational wealth in which you are going to pass on these properties to your heirs, there are ways that you can even defer the taxes so that they get a stepped-up basis, and basically you defer the taxes indefinitely. So this is all a little bit more complicated stuff than this particular video, but just to kind of open your guys' minds to the sort of things that are possible and why there is such advantages to building long-term wealth when it comes to real estate specifically. Also, commercial real estate. If you are a six-figure earner, right, a lot of the losses that you have, a lot of the write-offs that you get from rental real estate, you cannot use them on your taxes. You can only defer that forward and claim the losses when you sell the property. And you can pretty much step up the value of the property in terms of what you put into it and then deduct the depreciation from that. Anyways, it helps you with your losses, but you can't use those losses in the current tax year. You can only use those losses later on. So for six-figure earners, it's not necessarily beneficial when you do a ton of upgrades to the property because those aren't losses that you can take in the current tax year at all, right? So unless you're a real estate professional or you're married to a real estate professional, and there's certain details as far as what it means to be a real estate professional and the amount of hours you have to work in a year, but they get those tax incentives, those tax write-offs from their rental properties. I don't get those same tax incentives every year, but I can carry those losses forward. When you invest in commercial real estate, it works very close to like how a business works, and those expenses are able to be written off, and how you do your taxes now takes on a completely different approach. For business owners, you are more aware of how this works when you deal with your accountants and how you structure your losses and what things you can deduct and what sort of business expenses can be deducted from your earnings from your business. So commercial real estate is a whole other animal, but also something that is very important to consider in the real estate blanket of building long-term wealth using real estate. All right, so that was a lot, but there's still so much more when it comes to this topic. There's so much more. When it comes to rental real estate, for example, I always recommend at least 20% down. You heard me mention that earlier. 20% down to avoid PMI, private mortgage insurance, and that's something that will affect your cash flow. So looking at all of these different like aspects from making a real estate deal, it really is a lot of information to learn. So I hope this video helps. I hope this gets you started. I hope it also inspires tons of questions and I get a lot of positive feedback because, like I said, tons of positive feedback gives me that motivation to do more teaching for you guys, to do more education, more financial education. So if you want to learn more about real estate, let me know and I'll do a mini series on it. All right?